Hey, Steve Saretsky here. As always, this is the Canadian real estate market update. If you didn't get the memo last week, these videos are now published every Saturday. Basically going to record these at the end of the week on the Friday, pass them over to my video guy. We're going to clip in some charts and graphs to make these a little bit more visual so you don't have to just stare at my face for an entire 10, 15, 20 minutes. But if you like these videos, if you get any enjoyment out of them, hit thumbs up, subscribe. I appreciate the support. As always, we'll banter back and forth in the comments below. So if you have any questions, comments, suggestions, put those in the comment section. A couple of things I want to touch on. Basically, I want to recap some of the news and the important news that I am following for this week, as always. And then, of course, I want to touch on the Vancouver real estate market, basically a stats roundup of what happened in January, how things are sort of shaping up here in February, and we move towards the spring market. If you've been watching the financial markets, as I, do with fascination, every week, there's obviously been some turmoil in the stock market. Basically, a trade that was sort of unraveling. People were basically shorting the VIX, a fear index. That trade is basically unwound and has created some significant movement in the stock markets. So if you're paying attention to that, obviously that is important in the grand scheme of things. It all really comes back from that micro level, funnels down into the, from that macro level, funnels down into the micro level. So yeah, really sort of paying attention to that. If you have any comments on that, obviously put that again below. Having some calls recently from clients that are looking to sort of diversify their portfolio, so to speak, in terms of seeing what's happening in the stock market. Obviously, it's caught some people off guard. They're looking to sort of divest some of that risk, whether that's adding more real estate or subtracting. So having some of those conversations and keeping an eye on that. One thing I do want to touch on, as I've been very vocal about for the last year and a half, is really the mortgage credit environment and some of the lending that has been taking place. Obviously, we know the substantial amount of household indebtedness, the amount of home equity lines of credit, which have increased 500% since the year 2000. All the borrowing that's been going on. I think that the banks have been very aggressive in their lending. Obviously, as I've mentioned again, is how do you support ever rising house prices if incomes are basically flat? It really requires more leverage, and the banks willing to lend more, which is typical in a rising environment. Obviously, banks are more comfortable doing that if house prices can only go up. Running into a situation last week where some good clients of mine, good friends, young first-time buyers, basically they were approved for a purchase up to $1 million. So basically, I believe, I think they were going 10% down or something. I am very familiar with their incomes. Two, good, well-earning jobs, but certainly nothing that would, it's crazy way out there. And the fact that they were approved for $1 million purchase, first ever time, this is not supported by the parents on a down payment or co-signing or anything like that. It's strictly off the two of them in their late 20s, being approved up to $1 million purchase, which to me, I just found that incredibly remarkable. Even they couldn't believe it. They said, of course, we would never spend up to that much. We simply couldn't afford the monthly payments. And of course, that's in an environment where interest rates are really near all-time lows and certainly trending up. So, the fact that a lender is willing to give them this 5-year fixed, I believe, at 3.14%, up to $1 million, to me seemed absolutely insane. But again, as long as that sort of lending continues, that is what really helps support those house prices, right? The first-time buyers are going to get approved for $700, $800, $1 million. What's that next step? So something that I'm watching, obviously, looking at some recent data, what tends to happen in sort of later in the real estate cycle, as mortgage begins to tighten, as it is obviously with rising interest rates, mortgage stress tests, you tend to start to see the broker channel, the individual broker channel, start to take on more volume as borrowers or buyers get more creative, they seek out alternatives. They, you know, you have to get a little bit more creative. You know, who's going to go do a little bit more legroom for you? Is it going to be someone at the big bank, or is it going to be an individual broker who has access to, you know, credit unions, monolines, private capital, mortgage investment corporations? They can get much more creative. So you tend to see an increase in the broker channel volumes, and that's currently what we're seeing. We saw a pretty big shift from 2016 to 2017, and that shift is going to continue to increase into 2018. And there's a lot of mortgage brokers that have come out recently and said, yes, their volumes are increasing substantially. And this is really all part of the design as well from OSFI when they introduced this mortgage stress test. People don't really understand or realize that their whole goal behind that is that they know what they're doing. It might create potentially some more riskier loans as people go to, you know, riskier alternatives, but what they ultimately want to do for the financial system is disperse that risk away from all the big banks, and they want to put them all in, a lot of them, into the little guys, and just sort of spread all that out. And that's really been the whole goal behind it. But again, you can see that in the mortgage broker originations. So that's what I'm focusing on. I think it is an important metric, again, just tying the whole pieces together. Tapping into the Vancouver real estate market, there's been some questions on that. It seems to be a continued trend of what's been happening over the last little while anyways. I mean, the condo market in January continued to be pretty crazy. You know, obviously record low inventory levels. They're still seeing a ton of bidding wars. I think that we're seeing some buying where people are basically, you know, you've got your rate hold for 120 days. I think people are maybe panicking to make that purchase before that rate hold expires, obviously before interest rates rise. And there's really just not much inventory. So we're still seeing a lot of multiple offers. The average sales price had a huge uptick in January. I don't know how much of that was skewed from the higher end, but in Vancouver, that average sales price for the first time ever ticked over $1 million. And if you look at various metrics on a year-over-year perspective, the Vancouver condos increased by about 25%. So, you know, I mean, obviously that's an insane amount of growth. And I think realistically looking into the spring, right, unless you have a massive drop-off of sales, at the end of the day, in order for there to be downwards pressure on prices, that inventory has to rise. And right now it's just at rock bottom level, so that could take a lot of time regardless of what happens with sales over the next 3, 4, 5 months. But you know, you can see that playing out in the detached market where as a result of weak sales for the last 18 months, the inventory has been able to rise, and that's put the pressure down on prices, right? So like for January, the sales to active ratio for Vancouver detached was 7%. That's unchanged from a year ago, which that 7% is extremely low. That indicates downwards pressure on prices. Yeah, I mean, there was 91 sales in January. That was the second lowest number of sales in Vancouver since 2009. So yeah, I mean, the volumes are just simply not there, and that weakness of sales has allowed the inventory to climb, and that's ultimately pushing down on prices. But the reality of the situation is sellers aren't really panicking, so you're not seeing much movement on the prices. Like, I mean, I'm seeing homes where, I'll give you an example, it was out in the suburbs, but it's very relative to Vancouver. It's happening almost in every market, where someone had bought it in February of 2016 for 1.2. They basically tried to do a semi-flip where they put in new flooring and new paint, and then they tried to flip it, couldn't sell it, took it off the market, relisted it again at 1.2 with a different realtor, couldn't sell it, took it off the market again with a different realtor, listed again at 1.2, couldn't sell, and it's again on the market still for today, basically February 2018, for 1.2 million. So they bought it for 1.2 in 2016, and they've relisted it several times with several different realtors over the last 2 years, and it still can't sell at 1.2. So it's really a situation where the seller is basically like hold out, like that market will rebound, and I'll just, you know, someone will pay the price that I want. But again, you know, like, it really comes a question like how much longer sellers going to hold out, how much longer can they hold out, but there really hasn't been sort of like a trigger to force that sale. But I mean, I personally don't see much relief coming to the detached market in that short term window. Looking at, again, rising interest rates, a mortgage stress test, inventory starting to come up. I think the Chinese money has slowed significantly if you look at any luxury market across the world. So I don't really see that relief coming to the detached market. So I think for people that are holding out, trying to sell their detached house, I'm not really sure what they're waiting for. But again, that's sort of the situation. Again, I think sort of more late cycle dynamics, not only looking from the mortgage broker channel where you're seeing the huge increase in volumes, but looking at what is moving, what are speculators doing, etc., and the overall behaviors in the market. Most of the craziness, euphoric activity is coming in Fraser Valley condos. In January, Fraser Valley, they set it was a second record. I think 56% of condos in the Fraser Valley sold over the asking price in January, just off its peak, I believe, of 59% December. So it's basically just euphoric right there. And if you look at any metric, whether it's the median sales price, the average, or the average price per square foot, even the benchmark, Fraser Valley condos are up about 40% on a year-over-year basis. So, like, I mean, obviously that growth is just like absolutely insane. There's basically no inventory. It's the last bit of affordability. There's multiple offers, whether it's in Abbotsford, Langley, Maple Ridge. It really doesn't matter. And so, yeah, I mean, just looking at that, I just think it is pretty crazy, and that's really what's happening right now in the market. So I'm just trying to look at my notes here to see if there's anything else that I really want to touch on. I mean, basically, at the end of the day, the new listings are still low in pretty much every segment, even the detached. So that'll be something that I'm looking for to see if that mentality switches or changes. Obviously, again, February 20th, I believe, is when the NDP are supposed to come out and announce some changes. I have some clients that are sitting on the fence waiting for that announcement. How does that potentially impact things? I believe it's going to be a speculator's tax. That's my gut feeling, because I think they've been very vocal on that. I think it's an easier policy to pass in the public's eye. It's not as drastic and as polarizing as, say, banning foreign ownership. So I think that's potentially where they might go. I think speculators have a significant role in the market right now. And again, I've talked about this. The speculation has shifted into the condo market. Obviously, if you're looking to flip a detached house, there's really nothing to be done there. In January, for example, the number of homes flipped as a percentage of the total sales for Fraser Valley condos, I believe, was like 7%. So basically, 7% of the sales in January were like flip jobs within a 12-month period. So I mean, the place was bought and sold within 12 months. And a lot of the calls I'm getting right now are buyers asking me to help them find older units so they can basically renovate and flip. And it's condos, because that is where all the liquidity is right now. Obviously, as prices are still going up every month, that's a product that is very liquid, and it's where the speculation has focused. So I think from the NDP perspective, I think if they brought in that tax, it could potentially certainly have an impact, but that remains to be seen what they'll do. I have really no idea, so I don't want to speculate too much on that, no pun intended. Anyways, yeah, hope that helped. Again, these videos are going to be posted every Saturday if you didn't get that memo. I'd love to hear your feedback in the comments below. All right, see you next week.